Hello and welcome to this video. Today I'm going to be doing a stock analysis on Lenovo Group Limited. Now you probably know what Lenovo makes, but in case you don't, they make computers. And the reason I want to highlight them right now is because currently they are being shipped out more computers in 4 years ever since the pandemic, which means chances are they are going to increase on their next. As you can see, their next earnings is in 42 days. But before the tariffs hit, if they have sent over a lot of those, then they will not be taxed. Now, I like Lenovo quite a lot, given that they are by far the market leader in professional use, both in monitors and in laptops and just in docking stations and everything regarding that. Also, internal service, they are huge, huge, huge. Even though it is a Chinese company trading out of the Hong Kong index, it is very, very, very great stuff. We only use Lenovo at my company, just simply because the product is just the best. Now, if we take a look at the graph, as you can see, we are quite low at the moment. We did recently have a death cross, as you can see right here on the 14th of March, so just a little over a month ago. Now, currently, we are actually trading on two previous support lines levels, as you can see here. If we draw this line, as you can see, we are hitting previous lows, as you can see. So that's quite, we can actually make this even longer, as this is a bit of a stretch, but as you can see right over here, so it is at a bottom formation previously, so chances are it's going to increase at the moment. Now, it did fall from quite great height. As you can see, it was all the way up in 13 Hong Kong dollars back in the 13.56 back in the 21st of February. So, and ever since then, it has just been a hill down. Of course, after tariffs came out, it has just been even worse, falling and falling. Now, we did see yesterday that it did increase by 7%, which is actually quite crazy. It didn't increase more, given that we've seen other companies increase a lot more, just such as Apple, which is also in the computer industry. Now, I like Lenovo just because their products are great, and also because they also make servers, and I think that server is gonna be maybe the next boom, because of course we do need AI data centers. But tell me this: have you seen Dell, Lenovo, HP, IBM, Micron increase as much as you have companies like Nvidia? No, you haven't. And they are the ones who are actually going to have these server storage behind the actual AI chips, so or GPUs from Nvidia. Of course, companies are been buying Nvidia chips currently because those are the ones that you need your hands on first. But you need some storage behind that, second of all. And I think Lenovo could be aware of that. The only risk is it is trading out of Hong Kong, so perchance it is going to be a problem with the new tariffs of 125% on China. And I do believe that Hong Kong is also under the umbrella of China, given that they are a self-governing body of China. Now, let's look at the earnings here. As you can see, the earnings are quite decent. They beat them by 20% back in Q4 of 23. Then they beat them by 0.5% in Q1. A bit below in Q2. They were down by 2% in Q2 of 24. And then we did see this huge 85% up in Q3. You can also see that right here. And then they increased quite greatly from 11 all the way up to 13.5. That was the peak before it tumbled down. Now, the next earnings are guiding a bit below, which is coming in 42 days, but I think it's going to be surprised by at least 20%, given that we do see the largest exporters. And it's not that companies have been ordering these, but they have sent them out, so that they are stored in the US and Europe, so just in case the tariffs hit, it will be easier for them to distribute. Now, as you see, the dividends, they are amazing. 5.13% is crazy, crazy good. Now, of course, you see it's only 0.05, but then again, look at the price tag. So it's not much. Of course, always look at the percentage of dividend yield, not the actual payment. Now, they do pay out, as you can see here, they pay out in November and then they pay out in July. So it looks like they only pay out twice a year. Yep, as you can see here, it's twice a year. So November and July, so twice a year is of course better than once a year. I personally prefer 4 times a year, but 2 times a year is still quite great, given it's 5.13%, so very, very nice. And the next is going to come in here in 2 months, so of course it isn't in the chart yet, but yeah, of course, stay tuned, that is going to come. So if you like dividend stocks, definitely check this out. Now, as you can also see, they rake in a ton of money. They have quite bad margins, but then again, so does their competition in Dell and HP that also make quite a lot of laptops and computers for professional use. So yeah, quite bad margins, but that is common in the industry. Now, if we take a look at the seasonals, let's just go back all the way from the start. As you can see here, it is really, really varying what they do. Okay, that's actually a bit too hard to see. Let's go back to 2010. As you can see, it varies quite a lot. We do see some years where they're down 37%. Of course, 22 they were down by almost 30%, but then again, so was the entire stock market basically. Then 15, then down by 22%, and in 25, 18, and last year 8%. So these past few years haven't been that great this year and last year, so maybe it is a time to pick it up, as you can see. But then again, we did have 23, was the best year by 68%. But then again, we also see great years in 20 and 12 and 13. So we do see some quite high rises, but also some quite lows. So it is a quite volatile stock, but I wouldn't buy this to purchase it now and then sell it at, it was trading at $8, 8 Hong Kong dollars now. I wouldn't buy it at 8 and then expect to sell it at 200. I would buy it at 8, get good dividends for some years, then sell it maybe at 9.2, maybe 10 if I'm lucky. Unless, of course, you can snipe it perfectly and it is going to increase to 14. Now, let's talk about the technicals of this. For the day, it is a sell overall, and for the month, they actually get better in the moving averages, moving to sell instead of a strong sell, but the oscillators give out and turn to a sell, so it remains a sell. And that is, of course, just look at this death cross we had back in March, and then, of course, it is just continuing downwards. Now, we do see, of course, yesterday it increased a bit, but the problem we also have with this stock is the gaps. As you can see right here, we do have quite large gaps recently, which make the technicals a bit harder, both downwards and a bit upwards. So a bit unreliable for the technicals, of course. Now I've also see down here in the RSI, it is quite choppy. As you can see, we did have this huge pitfall here. Now, of course, if you don't know what the RSI is, that is for relative strength index. Is it above 30 but below 50? It is in the lower channel, as you can see right here, meaning it's trading downwards. Now, is it above 50 and below 70? It is in the upward channel, moving upwards, as you can also see here, moving upwards. And then, of course, we did have this spike here, which means it's being overbought. This is when a stock is moving unrationally highly upwards, given the previous price. So overall, it is quite choppy. We do see some actually great patterns here, where it stays in one, then stays in the other, and not up, down, up, down. Even though you might think, well, it's quite a lot of up and down, but just look at the graph. You can see it trades upwards, then it lays a bit flat. We do see some choppiness, then it steadily fall down again and trading sideways. So the stock itself and the RSI, we do see, of course, when it trades sideways, we will see more choppiness, but we do see quite easy descents and quite easy right up like this also. We did have this one here, which was quite crazy. So yeah, of course, it is always that, and then of course also this downfall, which was also quite crazy. Now the analysts reading this are quite great. They're at 80% up from the current price. That is probably also because analysts haven't had a chance to reiterate their targets after the tariffs. That those will probably come within the near future. And as you can also see, it is a huge company with 69,000 employees. Now, as you can see here, we have 26 analyst ratings on Lenovo, 17 buy, strong buy, 4 buy, and 5 hold. As you can see, they are quite great. So if let's say the top one is correct, you could net 117% if you purchased in now, which would be amazing. But I think it is going to be around 12, maybe 13. To be honest, I think that would be a great estimate for the year, which would be about 50% up, not this 80%. I think that might be a bit too much, but I do like the company just because their product is just by far the best in the market. Now, they do have a little problem with Microsoft also starting to sell the computers, which are great. I have looked at some of those, which is getting a bit into the professional businesses. But of course, they also have their Lenovo Legions, which are very great gaming laptops. So they are also in the home market and not only in the business. Now, if you look at annually here, you can see 23 they didn't earn that great money, but then again they guided upwards in 24, a bit above that in 25, and then quite great in 26. So I do think the next couple of years we are gonna see this increase decently. So I haven't bought it yet, but I could definitely think about it. But of course, there's also the thing that it is in China, and I just don't like the political turmoil in China at the moment. So, but maybe I shouldn't look at that. But yeah, quite interesting that it is so cheap at the moment. Would be a great opportunity to buy up in it. Now, of course, remember, this isn't financial advice. This is purely for entertainment and educational purpose. Now, if you did like this video on Lenovo, please don't forget to like and subscribe and comment any other companies you want me to make a stock analysis of.